Alrighty, hello everybody. I'm Boss Joe Boss, and welcome to another trading stream. We're gonna go over a handful of things. Now, don't get me wrong, a lot of these are central bank related, but right now, a lot of expectations for the broader market expansion in equities is more or less going to be determined by policy decisions, whether or not different central banks are hiking or not. And again, that's going to be relative based off growth in inflation, rates of change in each of those countries. And this is all XAI, right? So let's say in the US, you have US equities, right? Here's the S&P 500. It's doing A-OK. You remove AI out of this index, and it's pretty nutty how much it underperforms. Or if you just look at AI only, how much more that performs above the index, especially over the last 2 years. But the reason why we're going to be in our little stream here doing some research on some more macro policy related things is because when there's a broader expansion into not just specifically AI, but the expansion starts going into the AI related companies as they have been for the last several months. Excuse me. What you're going to see is more companies. Remember, only like 15, 20%, 25% of most of the developed world's economies have AI. Their AI utilization's about 15 to 25%, depending on the country. US and Europe have pretty okay AI utilization. Same thing with China. The more sectors of the economy that have AI utilization, the more broad you're going to see these things get impacted. Different equities of like, this consumer staples sector is suddenly seeing this huge AI bout because someone found a massive application for it. You know, it's probably not going to be coming like around the door, but it's going to be coming. And right now, what we want to just make sure is that by the time those companies get that sort of boom, that they are already in a good spot so that the more companies are actually willing to take those risks. And that requires a good economy, a good, healthy, growing economy that doesn't put those businesses out of business before they actually get to the AI stuff, right? So we're just going to be doing a macro thing, checking up on the health of the world, all that. So let's go ahead and check out a handful of things here. You know, I could just go down my weekly research. I mean, there's some stuff going on in the UK. We have Andy Burnham on July 20th. He's going to be in charge. We could look at the FTSE. Right. So this is the UK equity index. It's probably already topped out for the month. Let's see here. FTSE. There we go. This is FTSE 250. So FTSE 250 still probably has some gas still in it. FTSE 100 though, probably not so much. FTSE, and we can do by futures. Yeah. So if we're going any higher here, so for example, if this guy Andy Burnham, when he gets in on July 20th, actually just a couple of days ago, this is relevant, he appointed a chancellor for his regime when he becomes prime minister. When Andy Burnham becomes prime minister, a woman named Shabana Mahmood is going to be named as chancellor. Let's see here. Highlight is markets seem to have anticipated the prospect with gilts relatively outperforming, and the sterling touched a 1-year high on relief that a more interventionist pick was passed. All right. And that continuity with current fiscal rules looks assured. So no major spending changes are anticipated from the UK government on this. So we could check out. Oh, and here, so you could see this was the announcement today, or the other day, right? On what was going on with the chancellor. And you could see how that moved things quite neatly. Yield spreads are looking pretty killer here. Yield spreads have been a known leading indicator of FX prices for the last 40 years, so it's nice to see that the yield spreads are positive. They were negative over here. And currently it seems like we got a cluster more or less up here. So I wouldn't be surprised to see us tap 136. Now, look, my general expectation kind of across the board for on the FX side for a lot of these dollar pairs is just to see the dollar go lower. I am completely on board with just expecting a lower dollar for all the pairs. So essentially like down to, maybe this probability weight around the lower part of this 99. I expect this to move a bit lower. Look, that US CPI that came out, the big reason why that came down lower, much lower significantly, is because of gasoline. So gasoline prices fell through the floor like 10%. They fell 10% in a month. And if gasoline prices fall, I don't know, another 5-10%, you could end up with another nice deceleration going into the next month. So if you're already setting up the expectation, like I am, that US CPI is going to continue to fall, then that just means that the pricing of Fed rate hikes are also going to continue to fall. It's going to make pricing that December rate hike that everyone's essentially counting on much more difficult. It was already like kind of crazy when everybody back in June, when Warsh was first getting into office, they were saying, hey, you know what? This guy sounds pretty damn hawkish to me. And it was kind of crazy. He was not hawkish at all during his initial speech. He actually was kind of explicitly not setting any expectations whatsoever. And yet so many participants in the markets. Actually, it was kind of crazy. There were some people saying, oh, this is so hawkish, we're going to price in 2 rate hikes this year. And then literally from the same day, there'd be another report from another bank saying, oh, we're going to expect 2 rate cuts. And I'm just going, what the what? You guys are crazy. You guys are actually crazy. Thankfully, there were some people who I thought were sane in their analysis, and they were saying, hey, this is essentially a holding stance. This is like permanent, do nothing. And it, like, it's very nice to see after like a month and a half, all these other, kooks kind of finally come into the fold and expect nothing to change, right? It's just Fed is on hold, and we want the Fed to be on hold. If not, be a little more priced to the side of a rate cut. And the reason why is because that would be even more risk on. That'd be even better for not just US equities, but global equities. Not just the US dollar, but for a lot of other currencies. Because as these other currencies then no longer have to worry about the US dollar kind of screwing around. Actually, it'd be especially great for Japan. The Japanese equity market and the Japanese currency market would do pretty damn well considering how aggressively the BOJ is hiking, right? It'd also be good for the Koreans. The Koreans just restarted their hiking cycle. And they are a huge beneficiary because they got Samsung in their country, right? So Samsung is making them oodles and oodles of money. Yeah. It's doing wonders over there, the AI revolution in Korea. You know, they're no longer just the home of what is it, idols and K-pop. Is Idols Japan? They're no longer the home of K-pop. They also are the home of some of the most important technology in the world. I mean, they always have been for a long time, right? But like now, it's just waves and waves and waves of money coming in, right? So let's go ahead and continue down this rabbit hole here. We looked at a couple of equity indices. Let's look at the NASDAQ NQ, check out where that thing's probably going to end up going. And I wouldn't be surprised if this was the low for the month. So if we start to go, if we continue going lower, I would be very, very happy to actually pick up like sub 28 here. Like that's pretty darn likely to rebound there. Sub 28. I like that. So if we do something along these lines here, go red and then blue. Yeah, it'll be a pretty strong pickup there. So that's what I'd like to see. If we do continue going lower. Otherwise, I'm just going to expect us to continue to start to move more nominally, like so. And we can timestamp this. I like to timestamp my arrows. This is 7 and 17. Oh. And that's 14, 11. Oh, sweet. Go ahead and timestamp the rest of these guys here. Sweet. So those are kind of my two baseline expectations here for the NQ. So I'd probably want to wait till like Wednesday of next week before like committing to anything super heavy. Now let's look at the DAX, because there's actually quite a good number of guys that I know who are watching DAX related stuff. I'd argue DAX is probably going to continue to rebound, close more neutral like it has in the prior month again. So nothing crazy, just honestly, if the volatility here stays low for the remainder of the month, there could be some pretty decent day trading opportunities. And by decent day trading opportunities, I mean when the volatility stays low, the intraday noise becomes a bit more predictable when the larger, longer term, or at least the volatility here isn't like this. It's more like this section here and this section right here. It becomes a little easier to catch those highs and lows intraday. One of the tools I use for that is this range probabilities indicator. It draws the distribution of where tops and bottoms for a given day or week or month occur. And you can kind of see this is where the low occurred for the current trading day. And where you see these green peaks, this is where you have your highest probability of finding a low. We can also kick it back one more. It seems like the replay mode is kind of lagging out. This trading view window, damn. What the hell? Page unresponsive. What do you mean page unresponsive? I'm gonna make you responsive. Yeesh. Wow, I have to actually reopen it in a new tab to fix the problem. That's kind of insane. Wow. All right, let me do something real quick. Let me check. All right, it's got my stuff. All right, sweet. We're back in business. All right, sweet. We are back in business. DEX. We were looking at the Dixie DEX. So yeah, when intraday volatility starts to become more manageable, I like to use the ranges here. And you can probably kind of tell why. Now let's try this. Is the replay mode not gonna work? Oh, there we go. Now the replay mode works. Perfect. And there's your tail risk move. You had a bit of a bounce right there. You can actually kind of tell people were buying off here based off this kind of distribution, right? And then obviously some more bad news started to come in and you hop the hell out. And this is more or less a continuation setup. Good stuff, man. Good stuff. All right. Let's go to daily chart and let's find something else to check out. I was hearing some bad stuff about Bitcoin. All right. Bitcoin all-time history index. I don't know, man. Bitcoin looks like it's doing A-okay to me. I mean, I've been hearing guys saying like, oh, Bitcoin's over. And then, you know what? It feels like 2015 all over again to me. Because that's about when I got in. Like 2014, late 2013. But between 2014 and 2015, man, it was like pulling teeth getting anyone to pay attention to Bitcoin. And right now, it feels a lot like that time. Because everyone is just dogpiling on Bitcoin and crypto and just saying, oh, it's a scam. It's never going to work. You're just going to lose all your money. And I'm like, obviously, you don't actually understand what the hell this shit is. Because if you understood the basic fundamental economic dynamics that are hard-coded into the program of Bitcoin, you know, it was, in my opinion, a lot of the confusion and a lot of the pretty bad arguments of Bitcoin that people try and use to justify, you know, shitting on it come from calling Bitcoin a currency. And I hate that. Bitcoin's not a currency. So everyone who's been calling the term cryptocurrency to me is kind of oxymoronic. Like it's just not a currency. Crypto, the way I view it, cryptocurrencies really are, for all intents and purposes, commodities. I mean, we call them currencies because we just tend to like to use them like a currency, you know, as a medium of exchange. But the truth is that it is more like a commodity, the way it's generated and held, even transacted and traded. It's more like a commodity. They should be called crypto commodities. And all of these cryptos that, for example, the stable coins, those should be the cryptocurrencies. And then all of these proof of stake, dividend yielding cryptos, those should be, crypto dividend. I don't know. Crypto yields. And then you have all of these other projects that are trying to do something like, put on the blockchain your record of XYZ asset, right? So you take some I don't know, the deed to a house, and you are able to cryptographically prove by putting your deed onto this chain and attaching it to this wallet, and you own the wallet and you own the hash. I hate that. I just hate that, because now you've just added this attack vector of if someone's able to get access now to your crypto wallet, even if it's in cold storage, right? If they get access to now your deed, they technically actually own your house. See, in government, you need, for a lot of assets, not just a house, but for a lot of assets, you need to go through a whole process of transferring ownership, and the registry, or the quote-unquote blockchain, is held with the government. By the government offloading that responsibility, that trust, to third parties, you put yourself in a situation where, imagine, you're sending Bitcoin to someone and you send it to the wrong address, and they're not obligated to ever send you that Bitcoin back. Or even worse, you're sending it to a blank void address, where the money is essentially burnt, right? And you do that, I don't know how you do that by accident, but let's just say you didn't mean to do it and you sent it anyway. And you'll feel like crap afterward. But now imagine, instead of it being like a few $1,000s in Bitcoin, or even a lot of money in Bitcoin, now imagine it being your house. The deed to your house is sitting in a burner address. Like, obviously blockchain is not the appropriate tool as a ledger for that type of asset, right? That's not the correct tool for that. Now, honestly, there are some crypto blockchain / like proof of stake things, like Ethereum. You know why we have Ethereum versus ETC USD, right? Why do we have Ethereum Classic versus regular Ethereum, guys? Because there was a hard fork, because someone wanted to roll back a scam payment. That's it. There was a scam payment. Ethereum Classic said you cannot mutate, you cannot change the blockchain to roll back this payment, because just simply based on the principle, we cannot do this. And that's how it works in Bitcoin. But the people who controlled Ethereum said, no, we can go ahead and roll back that transaction, because that was a huge fraudulent transaction. And the people who were against doing that rollback went and created Ethereum Classic, right? Now, I don't know what the hell the state is of this project here, but there are a lot of examples where you see projects going in and changing the transactions after the fact because of fraud, and those aren't really blockchains, and I wouldn't call those commodities. They're like Chuck E. Cheese tokens. Someone can come in and just change how much money you have. Like, it's at that point no different than a bank, except now you're missing all the regulations that a bank has on them to make sure that they don't screw with your money. Now you're just dealing with a private corporation and putting your money literally into like a company's Chuck E. Cheese tokens. Now, of course, there's all sorts of other hoops that these companies right now have to jump through to change this, but the option is on the table for that to happen. And it even still technically is for Bitcoin, but holy hell, are you going to have a hell of a hard time getting someone to do a soft fork, unlike with Ethereum, of Bitcoin for any individual transaction. So it's, it's a doozy learning all this stuff. It's a doozy living through that stuff, because I didn't learn. I was just there when it was happening. Yeah, man. So just had to say you're old really quick. 29, man. Just 29. Just men. Just innocent men. Okay. Let's keep it going. Cha. Let's keep it going. What else is there here on the docket? We can go ahead and pull up something. I don't know. CL, crude oil. No, there we go. Crude oil. Look at crude oil going up, and away right now. Have you noticed that the rate of change here on oil has actually been pretty freaking phenomenal over the last few days, especially. So there's a few things going on, right? There, everyone knows about the attacks, right? Look, I don't want to go over the order of the attacks, but the MOU was signed. There were ships crossing the Omani side. The Iranians said to the Omanis that any ships passing through the strait, even on their side, needed to get permission from them in order to cross the strait. The Omani said no. The Iranians then attacked 4 ships. And then the United States attacked. The Iranians then attacked bases in Kuwait and one other place. And then the U.S. retaliated again. And it's just been one retaliate. Oh, and then after that one, the Iranians then told the Houthis in Yemen, okay, we're going to activate you to shut down the Bab el-Mandeb Strait. Go ahead and start shutting it down. Get ready. And now the Houthis and the Saudis are shooting at each other. And this is now a huge shitstorm because the Pakistanis... You see how confusing this shit gets? Now the Pakistanis are coming out and saying, hey, we explicitly had a red line here with you, Iran, to not use your terrorist cells to attack Saudi Arabia, or you, Iran, to attack Saudi Arabia directly. Attacking Saudi Arabia is our red line. Now, if you remember, when Pakistan, one of the main groups that brokered the MOU between the U.S. and Iran, while they were trying to broker the MOU, they were getting a defense deal signed, pact signed with Saudi Arabia, saying, hey, if Iran attacks you or one of their terrorist cells attack you, we'll consider that also an attack on us, and we'll go to war with you. That's what the Pakistanis were doing. So now the Houthis are in Yemen, are attacking the Saudis, and the Saudis are attacking them. And the Pakistanis are like, oh, shit. Oh, no. I guess what's going to end up happening is also the Iranians just blew up a whole bunch of Kurds in Iraqi Kurdistan. Today or yesterday. And so they are pissing off the most active military forces that are their immediate neighbors. I mean, from what I understand, as far as it comes down to the Kurds were actually provided weapons by the U.S. Trump said he provided weapons to the Kurds to deliver to protesters throughout November and December of last year, 2025. So then when the protesters, the 50,000 protesters that all got killed, all those people, according to Trump, were supposed to be armed by the U.S. through the Kurdistanis, then to the protesters, so then they could properly revolt and protect themselves. And because the Kurdistanis never delivered the weapons, they all ended up getting shot, dead, killed. And now you got 50,000 plus people dead right there. And this really extended war. So what we really need is, another group of people to rise up in Iran, because these are Shiite Muslims, if I recall correctly, in Iran. These guys, again, it might be Sunni. I don't think it's Sunni off the top of my head. Oh, man. Iran, Sunni, or Shiite. Shia. Gotcha. So Shia. So that's how it goes. So it's been pretty nuts. It's been pretty nuts. Okay, yeah, thank you very much, Jesse. Yeah, I was like, I gotta make sure I'm not offending the other 70% of Muslims in the world. Because that's not like a little mistake. It's not a little mistake when you make it. So, yeah. Nah, so right now, the way I see it is Iran is in a Cuba-style situation. And that's why we're looking at oil here on this chart. Iran's in a Cuba-style situation where essentially the U.S. is going to blockade the shit out of them and will bomb them with air support because they don't have any way of really shooting down a whole lot of planes. They shot down a couple of planes, but I mean, yeah, sure, maybe they could shoot down one or two more planes, but generally speaking, when you're out war, getting shot down maybe once, a plane shot down once every week or two, while you're able to blow up, in the tens to hundreds of pieces of infrastructure and weaponry and all sorts of shit. Like when you're able to blow up hundreds and hundreds of targets and it takes them a week or two to blow up one plane or some bullshit, and most of their targets hit are just these unarmed tankers going across the Strait of Hormuz, it's totally asinine to say that the Iranians have any kind of serious fighting power. So they will be bombed pretty much to hell. However, obviously Trump does not want to do that. Obviously JD Vance does not want to do that. So they're going to take the embargo route. They're going to just strategically bomb shit to disable their economy. And the longer they wait to actually come to a peaceful agreement, the more strategic facilities and locations and infrastructure are going to be bombed over time to continue to cripple their economy in order to continue to pressure them towards peace. I mean, that would be the best case scenario. And then at the same time, you're blocking off the strait, and then you're sending in essentially the U.S. Navy to control the area and the U.S. Air Force to hit those targets inland. Now, that was my expectation a week ago, is that we'd be stuck there for like 2 years as there's this essentially atrophy of hopefully the Islamic Republic's will to stay in power. And then after 2 years, there'd be a new crop of people willing to resurge that will be able to take on the responsibility that the original 50,000 protesters who were killed were never given the opportunity to meaningfully complete, right? But now, since some time has passed since I originally made that expectation, now we have Pakistan saying, hey, Iran, your Houthis group in Yemen are attacking the Saudis. That was our red line. You can't do that. We're going to war against you. And then the Iranians are attacking the Iraqi Kurdistanis. And those are a heavily armed, very militant group of individuals. They don't necessarily want to go and start killing a bunch of people in Iran, but they would sure as hell be open to facilitating regime change. Especially now that they're being bombed, they have much more political motive to assist in that. So they're now fighting a battle, not just on two fronts, but their entire airspace is dominated by the United States. Their entire most of their economy is blockaded because of the strait being blocked by the U.S. Navy. And now they're likely going to be attacked by the Saudis, the Pakistanis, and the Iraqi Kurdistanis by land, or at least with missiles and artillery, right? They're all going to be doing whatever they can now at this point to try and instigate regime change. Just those three groups are going to be doing what they can. Not even to say like Oman and Qatar are already doing what they can to try and get involved. But if those three start pushing militarily, let's say into Iran, the U.S. will be very happy because we're not sending in any people. And, at that point, Oman and Qatar will probably step in and provide support at that point because they've suffered a lot of economic damage. Because of the retaliatory, it's one thing when your nation is attacked and you do a retaliatory attack against those who initiated against you. It's another thing where you are attacked and in response you attack all of your neighbors. Well, that's what happened when the war started, when Israel first started attacking and the U.S. started attacking at the beginning of this war with Iran at Operation Epic Fury, right? Guess what Iran did when Operation Epic Fury started? Iran literally they were shooting at hotels, right? They were blowing up hotels and shit. They were doing a lot of damage to not just, LNG, oil and gas related stuff. They were shooting at hotels. They were really far off the mark. But then again, that's just kind of the structure of the IRGC, right? They don't really have a centralized command. Their whole thing is, if after Operation Epic Fury, the entire command structure was blown up, 2 times, 3 times, right? So all of the IRGC kind of military units started to act independently. And that's when you started seeing all these attacks, just all these neighbors, because they didn't know who was shooting at who. So they just started doing, the IRGC units just started acting independently and autonomously doing these attacks. And they still haven't totally been reined in, to say the least. So now we're just going to be going on to the next chapter here with Pakistan, Saudi Arabia, and the Iraqi Kurdistanis likely now taking on this next chapter with U.S. support in the air and by sea into whatever operations they want to do, because now they've been explicitly attacked, not just by the Houthis. The Houthis are, who knows what the hell's going to happen to the Houthis. They could get totally freaking obliterated by the Saudis. You guys understand how much money the Saudis have spent over like the last 2 decades into buying U.S. military equipment? They are packed. They would steamroll the Houthis if they absolutely had to. And that option is not a 0% probability at the moment. And if that were to start, then the Pakistanis might start moving in alongside the Iraqi Kurdistanis. Again, 2-front war. I don't want to keep reiterating, but that's the way I see things progressing so far. And it's very nice. There was that Joe Rogan interview. JD Vance did. It's explicitly saying we are not sending, 150,000 U.S. troops into Iran. We're going to let the countries there figure this shit out for themselves, right? We'll help them if we can, but, actually, speaking of that interview, so many people were upset about it. Oh my God. Totally nutso. Totally nutso. Ben Shapiro was pretty damn upset about the kind of the Catholic socialist views he was, I think, kind of projecting, kind of sorta, onto JD. A lot of Catholics are pretty socialist, though, I will say. Okay. Let's see here. What else do I got in my research notes? Oh yeah, the price cuts for ECB. Euro USD. Yeah, we are absolutely explicitly expecting the ECB to stay on hold at this next FOMC. So we'll see exactly how hawkish their commentary is. Their commentary at the ECB is not expected to be explicitly like crazy hawkish. It is just expected to be like, okay, we're not going to give you any details. We're not going to go super in depth on forward guidance. But what we are going to do is we are going to say we are looking for the next move maybe to be a hike, right? And that will probably be enough to continue pushing Eurodollar higher. We also got an RBA meeting coming up. And I think we're expected to get a hike out of that, if I recall. But yeah, ECB is going to be kind of in a wait and see hold scenario till September, and we'll get a hike out of them likely in September. At least that's the current expectation. Let's see here. What else is there? FOMC related stuff. Yeah. Mostly we're just going to be waiting on the next CPI read and the next flash PMIs. If those come out A-okay, then we can continue to expect the Fed to stay on hold. And then rate hike odds are going to plummet to the floor. And it's going to be risk on and staying risk on. It's going to be I mean, look, if you're looking at a lot of the earnings expectations going into the end of the year, the earnings expectations going into Q4 for not just the US, but also in Europe are just absolutely phenomenal. So I don't know what so many people are expecting there to be a super significant pullback for. Look, there could be pullbacks for all sorts of reasons, but right now a lot of stuff is just explicitly looking very bullish and risk on until the macroeconomic data says otherwise. A lot of the data is moving in the right direction worldwide, especially now since honestly the rest of the world has started to normalize around the Strait of Hormuz and the Iran war, and kind of has figured out how to isolate the economic effects of that. So every single new development out of the Iran war doesn't have as much oomph to it as it did when, it was breaking the, for example, a lot of countries are saying, oh my God, we only have like a month or 2 or 3 of oil or gas left. And you had all these countries like throughout Asia, for example, that were having commodities crises. You were seeing huge lines of like hundreds of cars or motorcycles, mopeds lining up to get gasoline, and it was just impossible for them to get gasoline. And then they were having energy problems. Some countries had brownouts in Asia. It was really bad. And now a lot of that energy has come back because the embargo was lifted with the MOU. So a lot of energy has been able to leave and refuel. Also, some countries have been able to find alternative sources of energy. Like, for example, Japan, they said that they had like 3 months, 6 months of oil at the start of Operation Epic Fury. And then once the United States started ramping up oil production and getting things shipped the hell out to Japan, the Japanese have said, oh, we have enough oil now to last till like the end of 2028. We have enough oil for like the next 2 years now. We are set. So a lot of countries over the last 2 months of the 4 months that this conflict has been going on for, over the last 2 months, countries have been able to reorganize their supply chains. And honestly, the fact that it only took about 2 months to kind of stabilize things, arguably stabilize things, right, is likely because of a lot of upfront investment from all these different countries and think tanks on supply chain risk management after COVID. So all these people who became new supply chain risk managers, because I remember all these universities starting to issue like degrees and certificates and whatnot on supply chain risk management from like 2021 and 2022. That was a big thing. Those people probably got into think tanks and all sorts of different economic groups. And as soon as this stuff going on with the tariffs in 2025, those guys probably got called the hell in. And now with essentially around any major geopolitical thing that impacts multiple countries, you're going to have these supply chain risk managers who have been bred and created out of the necessity that there wasn't enough of these people from COVID, are going to essentially create a whole cool new industry of risk analysis. That'll be very, very cool to see. So yeah, let's see here. What else is there? I'm just kind of going off on things off the top of this dome here. Let's keep going down the list. We got some BOJ stuff here in my notes. Kyuchi also said that the impact of the yen weakness on domestic prices is not necessarily large because consumer prices are being held down by monetary policy. So that's dollar yen we're talking about here. Yikes. That looks like the yen really wants to go above 163 here. Yikes. Honestly, I wouldn't be surprised if that was the low for the month. Oh, man. Yeah, it's getting hard to kind of tell what's going on. Look, next month in August, it looks pretty clear cut. Isn't this kind of nice? You can see next month's ranges. It looks pretty clear cut. We'll go at least below that S0.5 pivot. We'll probably trade at S1 next month. That looks pretty damn good. But this month, man. All right, let's go through a little bit more of the research and figure out what the hell's going on. The series of comments from the BOJ members offer a glimpse as to where the government's real preference lies. It will likely take some courage to push back decisively against the recent trends in both bonds and FX. Increasingly crowded short yen positioning warrants close monitoring. The yen remains an important funding currency for global carry trades, while higher JGB yields have made the yen a less attractive funding currency than in the past, reducing the risk of a repeat of the 2024 carry squeeze. An abrupt shift in BOJ policy could trigger an unwind in those trades and ripple across global assets. In markets, however, we continue to prefer equities over government bonds in Japan. So Japan, like the Nikkei, right, and Topsy. We continue to see a more constructive backdrop for Japanese equities as the economy emerges from decades of deflation, and the BOJ gradually normalizes policy. Honestly, I agree. I agree. And if you do see the Fed stay on hold or rate cut odds start to go up, you're going to see dollar yen plummet probably like a rock to 160 really, really damn quick. Also, look at that. Look at that expectation, man. Holy shit. That was June 6th. The 12th of June 6th. Look at that. That's just so on point. This is why we draw expectations, right? You can be wrong a lot, but this just kind of shows, hey, how calibrated are you to what's actually going on in this market? And when you know what's happening, you set good expectations in price and in time, right? And when you're not setting good expectations, guess what? Once some time has passed and you know those expectations aren't going to be met, it is important to go back in time and review, okay, why didn't that happen the way I thought it was going to happen? And that becomes a learning moment. You're able to set way better expectations in the future because you find out what information you were missing or what information you were maybe interpreting too heavily, getting ahead of yourself, that sort of stuff. And you only learn what those conditions are once you actually are setting expectations, and you are absolutely not going to be getting 100% of things right. Nobody gets 100% of the decisions they make in life correctly, Alrighty. Let's keep going down the notes. If pension... there's this whole thing about the GPIF. So GPIF is largest pension fund pretty much in all of Asia. It's based in Japan. And there's a conversation about whether or not it should increase its holdings of domestic assets in Japan in order to help support the yen here. And it seems like it's a major risk because literally every single bank that I'm subscribed to, at least half of them, have already made, not just one, but a handful of them have already made multiple reports talking about this massive pension in Japan, potentially acquiring more domestic Japanese assets as the next best, safest move to continue moving dollar yen lower. So if there's any news like, the GPIF is purchasing more domestic assets, like domestic bonds or equities. Let's see here. They currently hold 26.9% of their portfolio in domestic bonds and 23.8% in domestic equities. The current target asset allocations allow for the GPIF to hold up to 31% in both. And that would have room to increase allocations of domestic assets by just under 34 trillion yen, which could make a bit of a dent. That would require a lot more yen buying in order to buy those bonds and buy those equities, you need yen currency to buy those yen denominated assets. So that would increase the valuation of the yen because you have to buy all that damn yen. And also a bunch of other traders are going to see what the GPIF is doing and they're going to try and get in on it as well. And in order to do that, they have to convert from pounds or euros or dollars into yen to then go and get exposure to those bonds, to those equities, right? So that's kind of the train of thought that a lot of institutions are genuinely concerned about. Like, hey, we don't know when this is going to happen, but there's a lot of government officials and some central bankers talking about this being a possibility. So we are keeping a pretty stern eye on it. So GPIF, if you have exposure to Japanese assets, GPIF, keep that in mind. RBA next board meeting August. As such, the June quarter CPI update on July 29th will be critical. Okay. On balance, we expect the June quarter update to show inflation running too high for a further 25 basis point rate increase. Excuse me, from the RBA. Says MUFG. Right now, most people expect a rate hike out of Australia, I think, at the moment. I have a pretty aggressive expectation here, but a lot of this probably is going to have to get realized by the end of the month, right? Things are looking pretty good here, though, especially next month, right? Trading around S0.5, S1. 37% of lows occur around here seasonally. Looks pretty damn good to me. Also, Le Pen is kind of kicking ass in Europe. Good on Le Pen. Good on her. Alrighty. I've had some fun. I've had fun on this stream. I'll go ahead and say thank you guys very much for watching. If you want to hang out with me after the stream is done, I'll be hanging out in the Plan to Profit Discord. You can join this Discord by going to the description. And in the WAP, you'll also see a link to some trading groups and some indicators. If you want to go ahead and join the trading group, there's a 2-week free trial. Go ahead, join with the 2-week free trial, and you'll be able to see everything here in my trading group channels, including some trade vlogs, some trading group research, my notes that I actually used for this stream. You'll be able to read those notes. And then here's the Outlooks channel, some good stuff in that Outlooks channel, all of the research forum stuff. Again, this Discord is free. You don't need to be in the trading group for it. But if you want to be in the trading group, which is for those who are more active and dedicated, you can go ahead and do that. Alrighty, guys. I will see you all in a bit. Hope you had a fun time listening. Man, I really look forward to hanging out with you guys. You know, it's been a pretty busy summer, man. It's been a pretty busy summer. A lot of guys have just been off and away doing stuff on their own. Haven't been able to honestly see everybody I've wanted to hang out with, even online or in person. People have really just kind of been all over the place. And also with the heat, it's genuinely kind of prevented some people from coming out, except for just hanging out online. Especially here in Nevada, it's got to like 115 here in Nevada where I'm at. Pretty crazy stuff. So, thanks for indulging me here at the end of the video. If you want to hang out, come on and hang out with me in the Discord. I will see you all in a bit.